9 huge warning signs of a stock market at record highs. And with the Qs dancing as high as 748 and a half this morning, last trade 743 on the nose. Now is not the time to be a hero. And before we go through each and every example, along with some charts that I want to show you, let me remind everybody, we are in the midst of the greatest secular bull market in human history. Flying cars and trips to fucking Mars. I started saying that in 2017. Since then, the NASDAQ's up 500%. It'll be up 5, 6, 700% more before this is all over in and around 2035. Right now, it's 1991. Back then, the boomers were the same age as the millennials and Gen Z are now. And if you know your stock market history, and I was a licensed broker from 93 to 07, made all the mistakes, so you don't have to, including going bankrupt in 08 from the lows of 1991 coming out of the Gulf War. Now it's the Iran War. The S&P was up more than 800% to the peak in March of 2000. So we are nowhere near done with the greatest secular bull market in human history. But as I go through each and every one of these 9 examples and show you a few charts, it's screaming from the tops of its fucking lungs that we've got to pull back somewhere between 5 and 10%. It may be starting now. We're 5 points off the highs, but it might wait to the event next week with Apple. We've got Broadcom reporting tonight. The volume is still very low. In fact, 3 of the 4 lowest volume days have occurred in the last month alone. That is not the type of action that you normally see at record highs. So the institutions yet are not selling. They may soon be. So without further ado, let's jump into the charts and then I'll go through each and every one of these one at a time. All right, you got the Qs right now. Last trade, 742.27, down almost $4 on the day. And yes, we were as high as 748 in the pre-market this morning. As you can see, MACD, lower right-hand corner, insanely overbought, as well as the stochastics. But when I come out just a bit, you'll notice the histogram. Those are the green and red bars. It's below the zero line. So we could always do a double hump below the zero line and start to roll over now, or go back up over the zero line if Apple has something good to say. And again, Broadcom reports tonight. And so we may not be done. And let us not forget, there is a ton of 750 QQQ calls up for grabs by Friday. So I will not be surprised at all if they push higher into the close to end this week. But when we look at, as I pointed out numerous times in the Discord, what is Bitcoin telling you? Last trade, 65,623, as Mark Cuban now joins Saylor in selling, in his case, all of his fucking Bitcoin. That's a huge technical breakdown. We are back to a level that is absolutely crucial right there. If we close below 65K in Bitcoin, we are going to retest the lows down here of 60K. And when I go out to the weekly chart on Bitcoin, first stop, if we break there, is that red line at 62 and change. And then you open the door to right over here, this massive breakout at 50K. What was resistance should become support. So in my opinion, over the course of the next few months, and it could happen at any time, the low in Bitcoin is going to be somewhere between the red line at 62K and 50,000. So you may want to, in terms of strategy, have some layered ads between 62 and no sooner than that, as far as I'm concerned, all the way down to 50K. Maybe every 2,000 or 3,000 points, you decide what's best for you. I do not see an absolute implosion. Some technicians are calling for 35,000. That goes back to the 2009 trend line. Okay, possible. Somebody please do a 911 call on Michael Saylor. And by the way, why was he selling? We could debate that for another video, but was he trying to crash the market when he threw $2 million worth when he's got 1.4 billion overboard so he can buy it now at 65K or even less? That's certainly possible. So ladies and gentlemen, without further ado, if you don't mind, I consult my notes on my trusty iPhone. Warning sign number 1, record margin debt, $1.3 trillion. And by the way, I do not recommend you trade on margin. We've managed to generate more than a 2,000% return. That's 700% a year for those of you that can actually do third grade math without an ounce of leverage. No margin, no options, no futures, no fucking shitcoin bullshit. None of that. We index half to 2/3 of the portfolio, and we only buy the Qs, SPY, IWM after a 10% plus drawdown. In other words, as I go back to the Qs on the charts, and yeah, I've been using Yahoo Finance for 30 years. It's called pattern recognition. Why change now? We were buying all the way down here at 555. So while your average 401k is buying at nosebleed territory right now every single month, and there's nothing wrong with that, especially if you have a decent match from your employer, we hoard cash for 11 months out of the year and go in right here at the lows. So our average was in the 560s as opposed to buying it almost 200 points higher. And then, of course, if you've been watching this channel for any length of time, I was all over everybody like stink on you know what, as low as 400 on the Qs. And anybody who followed my lead into the market at that point is set for life. But when you've got $1.3 trillion of leverage, and that's almost $300 billion more than at the peak before the dot-com bubble burst in 2000, Houston, you may have a problem. Warning sign number 2, and these are in no particular order, the Buffett Indicator. Right now, as we speak, stock market valuation is 227% higher than the gross domestic product of this entire country. It is almost 60% more than it's ever been, including in March of 2000. And you wonder why Buffett has been sitting there now for 2.5 years, now north of $400 billion of cash, and outside a cherry pick on Google way too late after it all already 20x'd, but he is making money on that. He's done next to nothing in the last 24 months. Now, some of that is to protect his legacy. The guy is handing over the reins as we speak, and who knows how much time the Oracle has left. He has certainly made his mark in terms of stock market history, and we wish him well. But when you've got valuations at this high, that is a major warning sign. Number 3, very low volume. As I said to open this video, 3 of the 4 lowest volume days of the year have taken place in the last month. You normally want to see record highs on huge volume. So when I see the Qs, when I came onto air, not even at half normal daily volume today, and it's pretty much been the case for the last 40 points of the Qs since we crossed 700, the institutions are obviously not playing the game. Who's buying right now? 2 people. Shorts that are covering, that are getting slaughtered in particular in semiconductor stocks like Micron, and dumb retail idiots. Probably the same fucking idiots that sold to guys like me and some of you at 555 the last week of March. They see no problem buying it back up 200. Do you know in the last 3 years, despite being up 20x on our money, we've had more than 500 people come and go. Can you believe that? In the last 12 months alone, over 900% return. May, time flies when you get old, was our best month ever. We had over 20 wins. So if you're wondering if you should ever click that link, and yes, I'm giving you $600 on sign up, which means, of course, your second and third month are free, but it's clearly not for everyone. Hundreds of people have come and gone. You have to wonder, who the fuck walks out on 95%? An idiot. Or, in many cases, someone who just doesn't like me. You may have heard, Jason's a fucking asshole. He doesn't put up with any nonsense. He'll fire you within 5 minutes of you signing up. If you're due a refund, you'll get it. But it's our house, and now we got 150 badass motherfuckers that know a thing or two about making money and soon to be having a good time in Vegas this August. Would love to see you join us if you've got a few $100 to get in the door. Warning sign number 4, Bitcoin's implosion. Back to the charts we go, ladies and gentlemen. Somebody explained to me in one of the best risk on or off indicators in the entire market How in the world is Bitcoin melting down for the last several weeks as the stock market continues to melt higher and higher and higher? And I'm going to get to a warning sign that's going to refute that in a second. Answer: nobody really knows. Now, you could say this is your typical 4-year cycle, right? Up 3 years, you peaked in October of last year at 126, down for a year, which means we're going to bottom most likely sometime in and around October, down another 10, 15, maybe in worst case, 20,000 points. But I've never seen, and I'd love to hear it from you in the comments below, when's the last time you saw the king of crypto and just about everything else, Ethereum, Solana, etc., just completely melting down, and the stock market seemingly, unless you look under the hood, going to nosebleed all-time highs virtually every day? Apple's up 9 weeks in a row. Broadcom reports tonight. What's Walmart doing minus today's bounce? It was down 9 days in a row. Walmart said the consumer at the lower end of all things is in big trouble. And you're starting to see Shake Shack, which is also getting slaughtered, saying that some of their higher end customers are trading down to cheaper menu options. Houston, we may have a problem. Warning sign number 5 is the terrible breath. This was pointed out on CNBC yesterday. 50% of all the S&P 500 is below the 200-day. Below the 200-day as we go back to the charts. Pull up the S&P, Jason. And forgive me, as I reset this, this should be a blue line. This right here is the 200-day moving average. Half of the S&P 500, and this is obviously the ETF, is below this line. In other words, outside of anything connected to data centers, in particular semiconductor stocks, at least half to 2/3 of companies, especially if you include small caps, are below the 200-day. In fact, most of the time when we're buying a stock with respect to trading, just had our best month ever. I'm at or near new lows. A week ago, I was 60% cash. I gave you 7 stocks. You could have more than doubled your money. Watch the last 2 videos. But in the last 3 days, I put most of that to work. In fact, at the recording of this video, I'm at 20% cash. So I put 40%, etc., to work in the last few days. You want to know what I'm buying? Yeah, it's in the pinned comment below. But until we get better breath or a widening of this rally, we're going down at least 5 to 10% in the next few months. Number 6, I just gave it to you. Walmart was down 9 days in a row prior to today's bounce. When Walmart's falling apart, when crypto's falling apart, and breath is awful with half of stocks below the 200-day, you better be careful. And that's why I'm doing this video. Warning sign number 7, the rise in car repossessions and credit card delinquencies. Again, on CNBC, it was on Bloomberg last week as well. We're at 4-year highs. Not since the scamdemic of 2020, 2021 have so many people been giving up their cars or being late with respect to their credit card payments. That's another warning sign. Number 8, 30-year low in consumer sentiment 2 Fridays ago. And this is what I find very interesting. Consumer sentiment came in at a 30-year low. The stock market, 401ks, are at record highs. So why in the world, and more than half of this country has it, is sentiment so negative? Is it simply because of oil? Is it because we're at war and we were told that was not going to be the case? Again, I don't really have an answer, but it's one of many cross currents that don't add up. When you have $7 trillion of dumb retail cash on the sidelines and they're sitting there with 30-year lows in terms of sentiment alongside delinquencies in credit cards and repossessions of their car, Houston, we've got a problem. And last, but certainly not least, ladies and gentlemen, and I could keep going for 2 hours, but you wouldn't want to sit there through that. We've got $3.5 trillion of IPOs coming. The first of which is SpaceX on June 12th, followed by OpenAI and Anthropic in the third quarter. By the way, $3.5 trillion is 7% of the entire stock market. And these guys are rushing to get through the door. And if you saw the S1 like I did last night with respect to SpaceX, normally you've got a lockup of 6 months when it comes to insiders being able to bail on the IPO. Not this time. Within the first week or two, anyone who's not essential can blow out. So a lot of these hedge funds that got in for pennies on the dollar years ago, they can start selling almost out of the gate. That is unprecedented. And when hedge fund managers and institutions have to sell 7% of all equities, and perhaps crypto as well, that may be another reason why it's so weak. We've never seen anything like this. In closing, if I haven't convinced you already that you need to be careful, especially with putting new money into the market with respect to your retirement, unless you're forced to by a 401k, this is a midterm year. This month, July, August, and September are historically the 4 weakest months of an entire 4-year presidential cycle. And when you consider what I just gave you, and I could keep going, now is not the time to be a hero. So why in the world would anyone want to listen to me and join us in the comment below? Well, if you remember 2022, when we were in the midst of a nasty bear market, at the time I was on Twitter, the Discord hadn't even opened yet until the following year. Penny stocks, small caps, basically anything under 5 was on fire. So if we start going sideways, or preferably down 5 to 10% into the fall, you're going to see trading, particularly of small caps, in a interest rate environment that's not going higher, in fact, going lower. Once this war is over, it's going to be in fuego. We have a 95% win rate going back 3 years. You could have made 20 times on your money, doubled your money in the last 2 videos that I gave you in under 3 weeks. Until next time, always remember, as I'm gagging just outside of Atlanta, that I love you. And I'd love to see you join us right fucking now at trysmallbiz.com.